Hello all. Today we will discuss about certain very important concept. In the previous videos, we have just discussed with a bit information. So today we will discuss about the kind of question that is going to arrive majorly for your examination. Okay. So look at this question carefully. There is a fixed assets to proprietary fund information is given. So which is given as 0.75:1. So which is known as fixed assets goes on with the ratio of 0.75 and the proprietary fund takes the ratio of 1. Clear? Fixed assets takes the 0.75 as the information and proprietary fund takes the 1 as the information. Okay? And there is also reserves and surplus. So why this reserves and surplus whenever proprietary fund information is given is important because this proprietary fund includes all the share capital along with the reserves and surplus, along with if there is any profit and loss account which is given. Clear? So for that reason, whenever there is a proprietary fund arises, these reserves and surplus will be given. If not, no worries, ignore this reserves and surplus information. Clear? And current assets is given as 1 lakh, current liability is given as 40,000. So what is the thing that is you have to compute is you need to calculate the amount of share capital and the fixed assets. Okay. You need to calculate the fixed assets. Here there is a current assets information is given. You need to calculate the fixed assets. And there is also share capital information is given. Listen, whenever you are asked to compute the share capital information and the fixed assets information, out of these fixed assets to proprietary fund percentage is given. I mean the ratio is given. You need to apply the balance sheet equation. This is very major important. Okay. So what does the balance sheet equation goes on is towards your liability side. Which are the things that you are going to take into consideration? All the current liability and along with the proprietary's fund. So what does proprietor's fund includes? Proprietor's fund includes all the share capital and along with that, this proprietor's fund also includes the reserves and the surpluses. And towards your right side, you will take the all the fixed assets as well as the current assets. So this is what the balance sheet equation goes on. Clear? Very most important. Whenever you are asked to compute the share capital along with the fixed assets, whenever these information is given, certain fixed assets to proprietary fund information is given, you need to compulsory apply this balance sheet equation, then find out what will be the share capital information. Clear? So here, so consider the proprietary fund be X. Okay. So why do you consider it as X? Because 1 is the value which is given here. But consider it as X or 1X, no worries. Then fixed assets is 0.75. So fixed assets goes on with the value 0.75. Where does this occurs is, here there is a fixed assets to proprietary fund ratio which is already given. So which is called as the 0.75. So apply to the same equation. Proprietary fund is X or 1X plus 40,000 is the current liability which is given in the question. Current liability is 40,000 equals to fixed assets. Fixed assets is the ratio 0.75 and 1 lakh. See here, which are the thing you need to calculate? Proprietor's fund you have to calculate and the fixed assets you have to calculate because that two information are in the ratios. Okay, plus 1 lakh. Now replace the value. This is 1x minus 0.75 which is equals to 1 lakh minus 40,000. Clear? So 1 lakh minus 40,000 will be the value. So now here in the case 1 lakh you got 0.25. 1 minus 0.75 gives you 0.25 which is equal to 60,000. X is equals to 60,000 divided by 2.5. So these 2,40,000 is the proprietor's fund or it is a share capital you can call. Just it is a share capital because this 2,40,000 is not added with still with the reserves and surplus. I told you whenever there is a reserves and surplus is given in the question, This proprietor's fund includes that value as well. Clear? So what is proprietor's fund? Proprietor's fund includes all the share capital along with the reserves and surplus. So now this 2,40,000 is not still added with the reserves and surplus. So this is just the proprietor's fund you have calculated. You need what? You need to calculate the share capital here. You have computed the proprietor's fund. Clear? You need the share capital, but you have computed proprietor's fund. So if you deduct this proprietor's fund with the reserves and surplus or whatever the information is given, which gives you the share capital. Okay. So out of that proprietor's fund information, you are also asked to calculate the fixed assets by having the ratio of 0.75. So that is, there is a hint here. See it carefully. 2,40,000 takes the proprietary fund ratio as 1. You need the value of ratio of 0.75. So what will be the value for the fixed assets? Cross multiply these two. You get the fixed assets as 1,80,000. Clear? And now this is the proprietor's fund equation. Proprietor's fund. So what does proprietor's fund includes? Proprietor's fund includes all the share capital along with the reserves and surplus. So reserves and surplus is given in the question and share capital is not given, that you have to calculate, but the proprietor's fund you have computed. So what is the proprietor's fund? 2,40,000. So 2,40,000, which is equal to share capital plus reserves and surplus. We need the share capital. So just take this 40,000 here. So which comes to around 2,40,000 minus 40,000, which is 2 lakh as a share capital. So what was the thing that is asked to calculate? You are asked to calculate the share capital and the fixed assets. Clear? Now, with the other question, which is pertaining to the other question, you are supposed to prepare a balance sheet. Okay. So you are required to prepare a balance sheet. Very most important question, and sometimes it will be asked in the 14 marks as the section wise question, like A, B. A will be some other cash flow question, or B will be this operating, the ratio analysis. Okay. So here you are asked to prepare a balance sheet from the following information. The information which is given are the hint to prepare your balance sheet items. Clear? So current ratio. Whenever there is a ratio given, analyze carefully. The current ratio includes what? The current assets and the current liability. So out of these information, you need to compulsory calculate the current assets and the current liability. Clear? And liquid ratio. Liquid ratio is also known as what? Quick ratio. What does liquid ratio includes? All the liquid assets as well as the liquid liabilities. Then fixed assets, absolute liquid ratio. Liquid ratio is nothing but absolute liquid ratio. So absolute liquid ratio includes all the assets. Okay. Now there is a fixed assets to proprietors fund. Okay. So fixed, whenever there is no ratio which is given, it is understood and taken it as 1. So current assets goes on with the 2.5 and the current liability goes on with 1. The liquid assets goes on with the 1.5 and the liquid liability goes on with 1.1. Again, fixed assets to proprietors fund. So fixed assets takes the ratio 0.75 and proprietors fund takes the value 1. So this we have already computed in the previous problem, that is fixed assets to proprietors fund. Whenever there is this information is given, you need to compulsory find out what? Share capital and the fixed assets along with the proprietary fund. Okay. And there is one more hint which is given, working capital. So out of the current ratio that we have discussed in the previous classes, and whenever there is a working capital, you can easily find out the current assets and the current liability. These two are the hint to prepare the current assets and the current liability. Clear? And there is also a bank overdraft. Listen, whenever there is a bank overdraft which is given, it will be always deducted from the current liability. Okay, we need what? We need the liquid liability. So for that reason, we will deduct it and take into consideration. Okay, and there is no other assets and the liability. So these are the information that you need to calculate. Apart from this, there is no assets and the liability is the hint which is given. So record the information whichever is given as the given hint point. So current ratio, liquid ratio, record all the information. Then going on quickly with the problem. So there is a working capital. So what does working capital takes the formula? Current assets minus current liability. So working capital is 60,000. Current assets takes 2.5 and the current liability ratio is not given. By default, it takes the ideal ratio as 1. Whenever there is no ratios which is given, it takes the ideal ratio into consideration. So which shows the soundness of a company. So it is 1. So 60,000 is 1.5. What do you need? You need the current assets as well as the current liability. So if 60,000 is equals to 1.5, then current assets is 2.5. So current assets takes the ratio 2.5. Just cross multiply. So 60,000 takes the ratio 1.5. So what will be the current assets, which is going to take with the 2.5? So that is 60,000 into 2.5 divided by 1.5, which gives you the current assets as 1 lakh. Clear? And with the same information, you calculate the current liability. So 60,000 takes the ratio 1.5. The current liability takes the ratio as 1. So what will be the value of current liability? So 60,000 is equals to 1.5. Current liability is equals to 1. That is 60,000 into 1 divided by 1.5, which gives you 40,000. Just cross multiply and find out the value. See, out of the two information, working capital along with the current ratio information, you have computed the current assets and the current liability. Clear? The two information is done. This working capital as well as the current ratio information is done. Next, there is a liquid ratio 1.5. So out of that information, calculate the liquid liability and the liquid assets. Okay. So liquid ratio is equals to 1.5 is to 1. So find out the liquid liability first. Because why do you need the liquid liability? You have already computed here the current liability. So take that into consideration. So liquid liability is 40,000. That is current liability. What is liquid liability? Liquid liability considers all the current liability except the bank overdraft, or if it is any received in the excess amount. So minus bank overdraft. So 40,000 minus 10,000, which gives you 30,000. But while taking or while preparing the balance sheet, you will consider whole 40,000 to consideration, not the 30,000. Clear? And there is also one more information. If 30,000 is 1, that is the current liability. Liquid liability takes their percentage as 1. So make it as 1. Then liquid assets is 1.5. So what will be the value for 1.5? You have to compute. So what is liquid assets? So liquid assets considers all the assets except the stock and except the prepaid expenses. Okay. So while preparing the balance sheet, stock show it separately, liquid assets show it separately, current assets and the fixed assets show it separately. Okay. Obviously, this liquid assets and the stock put together gives you the current assets. But whenever there is this kind of information as a liquid ratio is given, you need to compulsory find out the stock. Clear? So 45,000 will be the liquid assets. Clear? You are find out in here what? Liquid assets. So liquid assets is 45,000. So just cross multiply. Then you need the stock information. I told you whenever there is a liquid ratio is given, right? Make it as a note. Whenever there is a liquid ratio is given, to compute it, you need to compulsory find out the stock. To find out the stock, you need only two information. So what is that information? Current assets along with the liquid assets gives you the stock. So current assets you have computed as 1 lakh. Liquid assets is also computed as 45,000. So 55,000 will be the stock. Clear? Now, when you record it in the balance sheet, you need to record only two information, which are those. One is the stock as 55, other one is the liquid assets as 45,000. Clear? Now, these are the information to find out the liquid ratio. Remember, whenever there is a liquid ratio given, you need to compulsory find out the liquid liability. Along with that, you need to compute the stock as well as the liquid assets. Clear? So now there is one more information, that is fixed assets to proprietors fund, which is given. So this has already been solved in the previous problem. In the same manner, you need to find out. So write down the balance sheet equation. So balance sheet equation takes the proprietors fund. Along with that, it takes the current liability is equals to current assets plus the fixed assets gives you the balance sheet equation. So in the same way, write down the information. So fixed assets to proprietary fund is 0.75:1. So let the proprietary fund be X. So there is a balance sheet equation. So proprietors fund plus current liability, which is equal to fixed assets plus current assets. So X plus, so which is also taken as 1 year, or else you can also write it as X, no worries. 1X plus 40,000, which is equal to 0.75 plus 1 lakh. So take this into consideration here. 1X minus 0.75, 1 lakh minus 40,000, which gives you 0.25, 60,000. So 60,000 divided by 2.5 gives you 2,40,000. What is this 2,40,000 is called as? 2,40,000 is the proprietors fund that you have computed. So which takes the value, that is the ratio 1. Clear? This 2,40,000 takes the ratio 1. But we need what? We need 0.75 because it is the fixed assets ratio. Clear? So fixed assets is equals to 2,40,000 into 0.75 divided by 1. Just cross multiply. So if 2,40,000 takes the ratio 1, what will be the amount if the fixed assets takes the 0.75? So which gives you 1,80,000. Clear? Now prepare the balance sheet. So first, moving into a balance sheet, just see which are the information you have computed. Fixed assets you have computed. Clear? And proprietors fund you have calculated. See, in this question, there is no reserves and surplus, so no need to calculate the share capital separately. So 2,40,000 proprietors fund calculated. So fixed assets goes on for the asset side. This proprietors fund goes on in the liability side. This is clear. Now, stock is given. So stock you have to write it. So 55,000 will be the stock. Along with that, there is also a liquid assets which you have computed 45,000. You can now also write the current assets as 1 lakh directly, but there is an hint, liquid ratio. So whenever there is a liquid ratio, you need to show it separately only. Okay. And there is also current liability and current assets that you have computed. So just record it in the balance sheet. So balance sheet proprietors fund as 2,40,000, current liabilities as 40,000, fixed assets as 1,80,000, stock as 55,000, current assets as 45,000. So which tallies for 2,80,000. Very most important for 14 marks. Thank you.